Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Dragonfly Energy.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. The overarching story for Dragonfly Energy is it's a fundamental turnaround.
Turnaround is absolutely the key word.
It is. It's been driven by some really decisive financial actions and, some big operational wins we saw in Q3 2025.
Right, and the stock has just been on a tear. Rallying from a 52-week low of, 15 cents up to around 90 cents after the last earnings. That's a 350% gain in just a few months.
It's incredible.
So what kicked this massive rally off? What was the trigger?
Well, there were really two major factors. It was a kind of 1-2 punch. First, they executed this transformative restructuring of their term debt.
Okay, the debt.
Yeah, and that included a $45 million refinancing. This stabilized the whole balance sheet, and crucially, it extended their runway.
Gave them some breathing room.
A lot of breathing room. And second, and this might be even more important for investor confidence, they successfully regained full compliance with all the Nasdaq listing requirements.
That's huge. That delisting risk was a huge cloud hanging over the company.
It was. And removing that risk factor just, it makes the stock investable for a much, much wider audience.
So with the foundation stabilized, did that translate into the actual business? If we look at the Q3 numbers, what do we see?
We see the results of those fixes. Net sales rose 25.5% year over year.
Okay.
Up to nearly $16 million.
That's solid growth, but where did the quality of that revenue come from? Where's the real strength?
It was driven by their high-margin channel, the OEM channel.
Original equipment manufacturers?
Exactly. And OEM revenue surged 44.3%. This is so important because it validates their competitive advantage in high-performance lithium batteries.
So this focus on OEMs, we're talking about the RV and specialty vehicle sectors, right? Where they have that big partnership with Soars Industries.
Precisely. And that partnership is a huge stamp of approval. It shows they're getting designed into these long-term product cycles.
Okay, let's unpack that a bit. A 44% surge in OEM sales. That implies their products are really, truly gaining adoption. What does that mean for their bottom line?
This is where it gets really interesting. Their gross margin, it expanded sharply to 29.7%.
Wow. And what's that compared to last year?
It's a massive 710 basis point improvement year over year.
710 basis points. That's a huge jump in efficiency.
It is. This product mix enrichment and operational efficiency is what's driving them so rapidly toward profitability. You can see it in the adjusted EBITDA loss.
Right.
That shrunk from about negative 5.5 million in previous periods down to only negative 2.1 million in Q3.
Okay, so they're closing the gap. Now, addressing the balance sheet again. The debt restructuring is huge, but how else have they shored up their liquidity?
Well, since July 2025, they completed 3 public offerings.
3 of them.
Yep, and they raised a cumulative $90 million in gross proceeds.
90 million. That's a lot of capital, but it also sounds like a lot of potential dilution for shareholders.
It is, and that's the primary risk to weigh. But that transition of the balance sheet from, constrained to flexible is absolutely critical.
And that flexibility lets them do what?
It lets them fund R&D and organic growth. It gives them the firepower to keep winning these OEM contracts.
So what does this all mean for risk? We know the gross margin is improving, but you said they're not profitable yet.
No, they are not. And that's key. The GAAP net loss for Q3 was still $11.1 million.
So the primary risk remains execution. They have to keep this momentum going to close that gap.
Exactly. And they have to maintain this growth and margin trajectory to reach break-even, especially because Q4 guidance, it actually projects a sequential decrease in net sales.
Oh, interesting. Down to what?
Down to around $13 million. So they need to prove the margin strength can hold up even with slightly lower revenue.
Okay, that's a really clear picture on the fundamentals. Shifting over to the technicals, what does the chart look like?
The momentum is, it's undeniable. The stock is currently trading above both its 50-day and 200-day moving averages.
Which is a classic signal for a bullish breakout, right?
A key signal, yes.
Yeah.
It confirms the trend is in their favor.
And what are the analysts saying about this price action? Where do they see it going?
The consensus analyst price target is at $1.50.
$1.50. So from recent levels, that projects, what, about an 85% upside?
Roughly, yes.
Yeah.
It suggests that analysts believe these recent financial fixes provide the foundation for sustained momentum.
And what are the key levels you're watching now?
We're watching the trading range of about 71 to 90 cents. There's strong support near 65 cents, and the next real resistance is up at $1.10.
Looking ahead then, what are the next events that could drive some volatility or momentum here?
That's a really important question. We have a couple of market-driven events coming up pretty soon. In late November, we'll probably see some volatility during the ETF rebalancing.
Okay.
And then, more critically, the window for institutional ownership filings opens between December 15th and 31st.
Ah, the 13 Fs.
Exactly. After sorting out the Nasdaq compliance and posting that strong Q3, institutional interest is expected to rise. Those flows often set the tone for the new year.
And when should investors expect the next big financial update from the company itself?
The market is very highly anticipating the Q4 and full year 2025 earnings announcement. That's expected around February 2026.
And the key things to watch for will be sustained OEM growth.
Sustained OEM growth and any commentary on their capital allocation and their strategic direction for the future.
Now, beyond those confirmed events, there's always industry chatter. What are some of the rumors or speculation floating around?
Well, there's significant buzz. Rumors include things like potential partnerships with other major OEMs or maybe renewable energy integrators.
Any talk of new technology?
Yes, there's some chatter about a possible revelation of a next-generation lithium battery platform. And, of course, there's ongoing speculation that Dragonfly is an M&A target.
An acquisition target for a larger energy storage firm?
Exactly. Or even international expansion into Europe or Asia. That's another possibility hinted at by the market buzz.
So combining the decisively bullish technical setup with a newly strengthened balance sheet and fundamentals that are clearly inflecting, led by that massive 710 basis point margin expansion Dragonfly Energy, seems positioned as a fascinating turnaround story in the high-growth energy storage market, provided they can continue to execute and close that gap to profitability.